Hi, folks. This is Lee with the Market Sense for the week of November 15th, 2020. The charts in this presentation come from the Trade Navigator software and weekly bond market chart. Been saying the same thing for about 9 months now, and it's inside is the key word. You've got this big move way back here in the back third of the chart. Everything is since then is inside to that. Then they went down sideways for a while. They came down here and go back up here, and everything since then is inside to that. And so far, the last 2 weeks are all inside to the previous 2 weeks. It sounds like a market that can't pick a direction, and that's true. It can't. It's hard to see how they can go much higher because interest rates can't go a lot lower than zero. Well, they could, but not much. And they're not going to raise interest rates. The Fed's already said they're going to hold it as low as possible. So until something breaks in the economy to create something, you got a sideways market here. It just can't pick a direction because there's no place for it to go. It's very frustrating to be a bond trader right now. Coming into this week, we were kind of looking at the best resistance around the 178 area and the best support 740708 right in there. They do seem to be holding. The level, the mid-moving average there is 176, give or take a tick or two. And they do seem to be holding above that. That was not to be anticipated coming in. That usually would only happen if the market is strong and going to break through this resistance. They could certainly still do that, but it's not what I was anticipating coming into the week. They just seem to be holding it so far, but I wouldn't be surprised to see them drop down here. Much depends on what the Fed says Wednesday afternoon. We'll get into that a little bit when we talk about stocks, which this is the S&P 500 here, the E-mini actually. And after a big down week, what this is often called a key reversal, but they don't really reverse that often, but you got a key reversal here, and it had some follow through last week, but not a ton. It didn't break support again. It kind of held that. And so now this week is turned back up. That's a little bit of a surprise. This support down here around 32.62 was actually looking pretty good until they turned back up. The resistance right here, the mid-moving average, is around 34.15, 16. Haven't quite been there yet, but they're doing a pretty good job of testing it. Here again, if there's a possibility they could go back up over 3,500, it all depends on what they get from the Fed Wednesday. And we have a 2-day FOMC meeting, and the Fed is in a really tough position because all they can do is monetary policy. And what they would really like to see jolt the economy is fiscal policy. That requires Congress to act, and unfortunately, there's nothing the Fed can do to get Congress to act. So they're a little frustrated because all they can do is impact markets, not the economy. Therefore, I'm not sure exactly what they can do or say at their meeting that will stimulate anything. I'm sure they'll taptoe around it with the statement, but I don't think they can lower interest rates more. I don't think there's much they can do to stimulate, and it'll be fascinating to see if Chairman Powell says something to attempt to sort of nudge Congress to make a move of any kind. That would be unusual, but it could happen. This is the QQQ, which represents the NASDAQ, basically. It's an ETF. And it has a similar pattern. They don't always, but it has a similar pattern right now to the S&P. We were kind of looking at the 264 area. 264.17 is good support here, but they've just sort of opened higher and stayed there. You can see big gap from where they closed last week to this week's open. They've just kind of stayed there. They're looking at resistance real close to 283, about 282.90, which is also just above last week's high. That's an interesting area if they get there. But if they like what they hear from the Fed, we could be up over 293 and up to this upper moving average without too much trouble. Again, sort of at the whim of the Fed. Now, not that the Fed is the be-all end-all. That's what everybody's waiting for Wednesday afternoon for the Fed's statement. We will also get a weekly employment report Thursday morning, and Michigan sentiment on Friday. There's some other things that can move the market this week, but I think the Fed is kind of the big dog. It depends on if they say anything that the market likes or dislikes, and honestly, I don't know what the Fed can do. I think they're doing all they can do, and well, it'll be interesting to see what they have to say. I'm not sure there's anything we can do about it, though. So that's what we've got for you today. I hope you can find something profitable to get yourself into.